So Keith is the Assistant Vice President and Senior Economist at the Federal Reserve Bank of Dallas, San Antonio branch. He joined the bank in 1984, and his areas of concentration include regional economic and economic forecasting. He has research papers in economics, which tracks publications in Economist. That publication ranked Phillips in the top 5% of economists across the world in terms of number of distinct publications. Over the past 16 years, he has been the most accurate forecaster for Texas job growth in the Western Blue Chip Economic Forecast. He transferred to the San Antonio branch in 1996 in an effort that they've made to improve the regional economic coverage of the Dallas office and better serve the needs of the South Texas community. He teaches courses in managerial economics and quantitative analysis in the executive MBA program at UTSA. It's because we're a little farther commute. But we're happy, UTSA I know is thrilled to have him. He earned his PhD in economics from Southern Methodist University, holds a BA and MA in economics and a Bachelor of Journalism degree in news and editorial from the University of Missouri at Columbia. Please join me in welcoming Keith to the stage.
Missouri, despite a terrible basketball team this year, did manage to beat the Aggies last week, so that's always good. Thank you for inviting me here once again. I noticed there's only one economist on the program out of the speakers, and you're probably feeling pretty happy about that. I have a lot of slides. They say the definition of an economist is someone who's good with numbers but doesn't have the personality to be an accountant. And so Red mentioned his wife doesn't dream about him anymore. So I couldn't pass up telling you, my wife and I are about to celebrate 30 years, so we're just newlyweds compared to Red. But sometimes before speeches I run jokes by her, and she has a particular one that she likes, and it's the one about the patient that goes to the doctor, and the doctor says, sorry, you only have 6 months to live. And the patient says, isn't there anything I can do? And the doctor said, well, if I was you, I'd marry an economist. And the patient says, marry an economist? What would that do? And the doctor says, well, you'd still have 6 months to live, but it'd seem like an eternity. So I'll give you a little bit of that eternity. So today I'm going to focus my remarks on the Texas economy. And I've given a few speeches already this year about Texas, and we kind of gone through January. Things have kind of settled down, but particularly in December, there was a lot of concern about both the U.S. economy and somewhat about Texas because of the decline in oil prices that occurred in the final quarter of the year. So we entered this year kind of facing uncertain waters. I'm going to talk a little bit about that and what's likely to happen this year. So the Texas economy, just kind of leading up to where we're at today, as you might know, kind of came out of the Great Recession at a much faster pace than most other states in the country. We kind of had a normal recovery and bounce back in the years following the Great Recession. But in 2015 and 16, oil prices collapsed and the Texas economy weakened quite a bit. Our bank president was new at the time, and he was going to the FOMC, and each of the bank presidents reports on conditions in the district, and when he presented my forecast that the Texas economy would weather the storm of declining oil prices, maybe job growth would slip below the national average, but we're going to see continued growth. Many up in D.C., I think, questioned that. They thought of Texas as basically an oil and gas state, and when oil prices go from above 100 to below 50, that the Texas economy goes in recession. Well, that didn't happen. In 2015, job growth did slip below the national average, and then again in 2016, but Texas, particularly the I-35 corridor, Dallas, Austin, and San Antonio, barely impacted by the decline in oil prices. Most of the weakening of the state obviously occurred in Houston. The Houston MSA is 25% of all jobs in the state. Now, Midland, Odessa obviously went into the tanks, but that's 1.5% of all jobs, so they do not have a very large impact on overall state growth. So 2015 and 16, the Texas economy slowed. Oil prices in mid-2016 started stabilizing above break-even levels, and the oil and gas sector started recovering. Meantime, our manufacturing sector also began to recover, and the economy of Texas returned to its normal place, which is having job growth above the national average. Last year, job growth accelerated further. We had very strong growth in manufacturing, construction, and mining. Service sector continued to grow very strong, and labor markets tightened to such a degree that job growth was subdued last year by the labor force constraints. Had forecasted for last year growth near closer to 3% when it came in last year at 2.4%, and I think most of the reason why it wasn't stronger was just because the lack of labor to fill job openings. So this year, coming into the year, we're at this position where we're still having struggles finding workers. Most companies have open positions trying to fill, and with the decline in oil prices, the energy areas of the state are likely to weaken. So my forecast suggests that job growth this year after 2.4% will be somewhere between 1 and 2% this year, both due to some demand weakening from the energy sector and a supply constraint from labor. So if you look at Texas job growth, Texas in this chart is the black bars, and the U.S. is the red bars. And as you might notice from the chart, Texas usually does grow faster than the U.S. average. And if you look at long-term growth in Texas, it's about twice the pace of growth as the national average. And as you know, part of this, as Red mentioned, is the Texas mystique. Texas is a place that has less regulation, has more opportunity for businesses, and the cost of living being lower than many areas of the country has opportunity for individuals. So if you're a state that people want to go to because they can afford a good standard of living, and you're a place where a company can maximize profits because of low taxes and regulations, you're generally a state that grows faster than other states. And that's what Texas has been. During years where oil prices swing a lot, either high or low, then we change our pace relative to the national average. And that was in 2000, as you know, and notice on the chart in 2015 and 16, once again, we slipped below the national average. But once again, in recent years, last year and the year before, we're above, once again, the national average. Our unemployment rate, as I mentioned, is at historical lows. This is good news for workers, bad news for employers, and does set constraint in terms of growth. That labor is a resource for production, and there's a shortage of that resource right now. Texas unemployment rate in December was 3.7. The U.S. was 3.9. If you look across the state where the growth is occurring, you can see that Houston, the Houston MSA, once again, 25% of all jobs, has seen a recovery from 2016, where it had just slightly negative job growth during the oil price decline. But Houston showed recovery in both 2017 and 18. Meanwhile, the I-35 corridor of Dallas and San Antonio and Austin put together actually slowed last year. And this was not likely due to any kind of demand reduction, but mostly due to the fact that labor is very hard to find. Now, Austin was an exception to the rule of labor tightness. Its unemployment rate is 2.8%, and yet it managed to have job growth of 3.2%. And that's because Austin has its own mystique. And despite the fact that labor markets are tight throughout the country, Austin can still manage to bring in workers from out of state. So its labor force growth held up last year, while labor force growth in places like San Antonio and Dallas showed a sharp slowing. So overall, things remain good across all metro areas in the state, with some slowing occurring simply because the lack of workers. If you look across industries, you see a similar story with persistent job growth across almost all industries. The strongest one there is natural resources and mining. As we know, the oil and gas sector has been growing very strongly. We have surveys at the Dallas Fed that we do where we survey businesses across the state. We have a service sector survey and a manufacturing sector survey. As you know, most jobs are in the service sector. This sector tends to be less cyclical, and it managed to continue to grow during the oil price decline years, but picked up in 2017 and 18. This red line is the service sector revenue, which is kind of the bottom line, how the service sector is doing. And the orange line is the retail outlook. It's a component of the service sector. It's a little more volatile, but it's followed along the same pattern. One thing you might notice at the end of the year, last year, with all the uncertainty in the financial markets and the decline in oil prices, we saw some weakening in the service sector. But anything above zero is still positive growth, so the service sector continued to grow throughout the end of the year, just at a slightly weaker pace. Manufacturing, this is the blue line is production and the red line is volume of new orders. And you can see manufacturing last year reached highs not seen since 2005, but toward the end of the year we saw some slowing of manufacturing activity. So in both of these surveys, we asked businesses, what's your outlook? So you have three answers. Our outlooks have improved, stayed the same, or worsened. And this is the net between improved and worsened. And you can see in December, the outlooks for both the service sector, which is the blue line, and the red line is the manufacturing sector. Both of them in December went to negative, meaning that on net their outlooks worsened somewhat. So that was a big fall. It looked kind of like the fall in these lines that occurred at the end of 2014, the last time oil prices declined sharply. I do say that this survey came out, I think yesterday or the day before, and both of these lines have ticked up in January. So it appears that outlooks have been improving this month, but there was this general decline in the outlook at the end of the year. One of the things we look at is exports. Texas is the #1 exporting state in the nation, and by percentage of the jobs, we're in the top 5% of jobs tied to exports. And this line here, the green line is well, it's an inverted scale. It's the Texas trade weighted by the dollar, and when it falls, it means the dollar is increasing in value. Generally, when the dollar increases in value, our exports begin to slip because the price of goods produced in Texas goes up. This has not been the case in 2018 when the dollar was very strong and yet exports continued to increase. And some of this was the very large increases we've seen in oil exports since the ban was lifted, but also natural gas exports to Mexico. We're exporting a lot of natural gas through pipeline to Mexico. But overall, exports have held up, but the dollar is going to continue to put pressure on our exports if it remains high. Toward the end of the year last year, we also saw some weakening of our leading indicators for the housing sector in the state. Single-family starts declined, permits declined a little bit, and multifamily permits also declined, suggesting some weakening of the growth in the housing sector. The big elephant in the room is the decline in oil prices. The green line here is the rig count, the blue line is the oil price, and the red line is natural gas prices. You can typically, after a big decline in oil prices, the rig count will start to fall about 3 months later, which puts us pretty close to current time. And it's hard to see at the end of that green line, there's a little bit of a dip starting in the rig count. We expect the rig count to fall somewhat this year, but not nearly as much as it fell in 2015. So we have a survey that we do. Our energy survey is the largest energy survey in the country, the Dallas Feds. And these are break-even points. We ask drillers, what's the break-even point for new drilling? What does it take for oil prices to be to start to drill new wells? And so this is a little bit data. It was the first quarter of last year, but in the Permian Basin, the average break-even was about 47, but a range of 20 to 70. So if oil prices settle down in the $50 range, it doesn't mean a collapse in drilling activity. There'll still be new drilling activity, but we're getting close to some serious weakening if oil prices slip below, say, $45 a barrel, which we don't expect, but I can never predict oil prices. So, okay, I have 1 minute left. If oil prices persist near 50 to 55, Texas will start to see slowing of job growth likely sometime in the second quarter based on past relationship oil prices. The energy survey in the fourth quarter suggested weakening started already in the fourth quarter with the oil price decline. In mid-December, our contacts expect that the oil price will end this year at about $60 a barrel. The Texas leading index in the 3 months ending in December has started to decline, as shown in the red line in this chart, which suggests still continued growth in Texas, but somewhere between 1% and 2%. San Antonio economy remains healthy, although job growth so far this year is only so far in 2018 is looking about 1%. I think that number will be revised up when the benchmark comes out in March. But overall, San Antonio has a lower unemployment rate than the state and the nation, and it's hard for, I think, San Antonio to kind of attract jobs. It has much harder time when everything else is good everywhere else for them to attract jobs to San Antonio versus someplace like Austin. But San Antonio, I was talking to a reporter about this, it's less volatile than most areas, so what does that mean? It means in bad times, San Antonio doesn't decline as much, and in good times, it doesn't boom as much. And essentially, that's what we're seeing in San Antonio, steady as she goes, with good growth in healthcare, and leisure and hospitality. Even federal government grew pretty well last year. So in summary, the Texas economy had a very good year last year, constrained by tight labor markets. At the end of the year, with the decline in oil prices, the outlooks weakened somewhat, and we expect a slowing of the oil and gas sectors this year. But overall, the state economy, places like Austin and San Antonio and Dallas, will feel pretty much like last year. There's a lot of good demand, but not many workers to fill open slots. The biggest risk to the forecast is always a sharp decline in oil prices. While we don't expect that, we never do when they happen. But trade is also important to the Texas economy, and a lot of businesses in our surveys report that due to trade uncertainty, they're hesitant to expand until they find out how all this will shake out with trade. So that remains a risk to the economy. So that's all I have. I'll just mention that the Dallas Fed has lots of publications on the region, including for Austin and San Antonio, zero marginal cost. So enjoy.
Thanks, Keith. And for those of you who don't remember from school, zero marginal cost means free, except for like your time or whatever it is. So thanks a lot, Keith. And we're really happy to have some great presenters today, along with Keith. And I want to give a special appreciation to Chris, and you'll see why in a second. But Chris is the Chief Operating Officer of CPS Energy. He's responsible for the overall operations and strategy, including 7,500 megawatts of generation capacity, 12,600 miles of electrical distribution, 1,500 miles of electrical transmission, and 5,300 miles of gas distribution system. He's also responsible for corporate strategy, including the integration of new technologies and the development of new products and services for CPS customers. He was formerly a partner at McKinsey & Company. This is why I'm especially grateful. He has a Bachelor in Science from Texas A&M University. He's coming here to present to us And then, Keith piles on and talks about basketball defeats. So Chris, thanks for coming out. He cleaned up his resume by getting a master's and a doctorate from MIT. Please join me in welcoming Chris to the stage.
So I'm going to talk about how to power CPS Energy is powering a fast-growing and, as Red said, a dynamic San Antonio. San Antonio is growing. It's a great city, and CPS power is really the lifeblood of this city. And I'll talk a little bit about that. There's a lot of stats that we can go through that will kind of give you the health of the economy. I didn't bring a lot of that. Probably should have next time, but I'll go through a couple slides here. First of all, we are the largest municipally owned gas and electric utility in the country. LADWP, LA Department of Water and Power, is a little bit larger, but they got water in their title, so we take them out of the study. So we're the largest. We got about a million plus customers on electric and gas company, 11 billion under assets, 2.6 billion in revenue, AA credit rated, and we've been serving San Antonio for 158 years. I think the Alamo was one of our first customers, seriously. So we're a great company, a great governance structure. I would like to recognize our trustee, Ed Kelly, in the audience. Unlike a lot of public power, we have an independent board of trustees, which allows us to act like a business, but at the same time, we're very aligned with the community because we're owned by the city of San Antonio. And also Derek Coward, former board member and board chair as well. So again, I think a business owned by a community, we act like a business. We got a lot of folks from the investor-owned world at CPS Energy. We have a lot of people that have grown up through the years, that have spent 30, 40 years at CPS Energy. So it's a really good hybrid of the public and private sector in how we run that utility and how we care about this community. So again, and especially under Paula Gold-Williams' leadership, there is a focus on people, there's a focus on this community in a way that is truly unique, and we're seeing that in a big way. Paula has put in place a people-first culture where we truly care about our customers, our community, our employees. All of that is kind of wrapped around in terms of our strategy and how we move forward as a utility. I think a testament to that is we contributed over $1 million to the United Way this past year. We had 21,000 employee volunteer service hours. So again, our heart and our passion is about this community beyond just the numbers as we speak. So let's get to some of the numbers. I think this is kind of a stat that kind of blows my mind. 2010, 80% of the power that was serving San Antonio was coming from coal and nuclear. We were very concentrated in coal and nuclear. Over the next 5, 6, 7 years, we've diversified that generation mix. So we're a much more balanced, diverse utility. We've got about 25% natural gas as a fuel source, 25% coal, 25% nuclear, and 25% renewables, solar, wind, energy efficiency. So we're a much more balanced utility. If natural gas prices strike, we can run our other assets better. So there's a nice risk protection that this diversity offers this community, and I'll show a little bit more about why that's important, especially with some of the power issues that are happening at the ERCOT and state level in terms of the reserve margin. This is, we always want to show a few solar and wind charts. So this is, we're the #1 solar utility in the state of Texas. This is a big solar farm in Haskell, Texas, another big one in Pecos, Texas. A couple years ago, about 80% of the solar activity in the state of Texas was coming because of CPS Energy. So we were a very early leader in solar in Texas as part of our new energy economy, and really has gotten the state kind of moving in terms of renewables. The other thing I'd say is we've also put a lot of solar in our city itself. So we have not only solar in West Texas, but we have a lot of plants that are physically here in San Antonio, close to load, part of the fabric of this community, and kind of really takes solar to a whole different level than just zero emission power coming from remote areas. But we have over 500 megawatts of solar. We're also one of the largest wind portfolios in the state of Texas, and I have a picture of, this is a wind farm near Corpus Christi as you go to I-37. As you go into Corpus, you can see it on the left. The interesting stat on this one, the question on coastal wind, two things on coastal wind. One is the wind blows in the afternoon hours, which is, correlates to our peak much better than West Texas, which is more of an overnight wind resource. But the issue with coastal wind is, can it survive a hurricane if a hurricane comes through? And at least in round one, Hurricane Harvey was a dead bullseye at our wind farm at Corpus Christi, and that wind farm was only offline for a couple days and came back on. So again, it did show that even this resource is resilient in a major storm like that. This is a picture of all of our renewables, so you can see that, again, we're quite active across the state, West Texas, South Texas, coastal, San Antonio itself. So we've got facilities across the state in terms of helping that 25% segment that we talk about, our generation mix. So let's get into kind of how we are supporting a growing and dynamic San Antonio. I think some of the comments earlier, San Antonio is one of the fastest growing cities in the state, certainly and among the fastest in the country. 1.5 million people. We added 24,000 customers here in 2017. So we're seeing quite a bit of activity here in San Antonio. And actually, you're seeing a lot of, at least I see out on the road, the traffic's got a lot more hectic. You see license plates from other states. So I think we are getting some effect of people moving from outside of San Antonio to pursue opportunities here in San Antonio. So one of the things that I track is new meter hookups, new meter connections, and so this is basically the number of new meters that we set all the way back to 2011, and you can see back then that we were setting about 10,000 meters. So this is 10,000 new accounts for us a year, and with each account there may be 2 or 3 people in that home. So this is 40,000 new folks coming to San Antonio. And what you can see over the years, we started at about 10,000, and now we're at about 15,000 new meter sets per year. So you've seen a 50% growth over the past decade for San Antonio. So San Antonio is definitely growing because we're seeing those connections, that need for power, and again, it's a testament to all the great things that are going on in San Antonio. The other thing, yes, sir. No, you're on. Well, a couple things. ERCOT, which is the system operator for the state of Texas, one of the things that they pride themselves is they're an island. They don't connect to other states, so they don't come under federal regulations. But they're starting to look at potential tie-ins into Mexico, so we can basically provide power, down to Mexico, and also get power if we need it. So there are starting to be some discussions about tie-in between Texas and Mexico from a power standpoint. Obviously, from a fossil standpoint with natural gas pipelines, I think there's a lot of activity there. So there seems to be a lot more interest to have trade in terms of power and natural gas with Texas and Mexico. The other thing that's going on in Texas, and all of you know, is not only population growth, but we're seeing record temperatures. So we saw this past summer, we had 27 days above 100 degrees. We had 85 days above 95 degrees. July was 3.8 degrees hotter than average. So you can see that the extremeness of weather is happening, and Texas is getting affected. So not only do we need to serve more people, but we have higher loads because of it. So actually, from a utility standpoint, that's not a bad picture to be in. But again, that means that we've got to continue to invest in our infrastructure, build additional generation to serve that growing load. The stars are all the record days for that day. You can see that. The other thing that translates into the load. So this is peak demand. So this is the highest demand for that year. The blue line is ERCOT demand, and the orange bars are CPS Energy, San Antonio's peak. So you can see ERCOT is about 74,000 megawatts, and it's been growing higher. The red stars are basically the record peak of usage for Texas as well as San Antonio. You can see San Antonio has been pretty flat, about 5,000 megawatt peak over the last decade, even though we have grown and even though we've seen this record temperature. And part of that has been because of our conservation demand response program. So we have about it, and I'll show you a page the next page. We have 140,000 customers that we partner with on thermostat programs or large industrials which will shed load during those peak hours. We pay them for that power. It's actually good for them because it's only a small portion of the year, maybe a couple hours out of the year that they can shed that load. They get paid, and they can plan around that. So that has allowed us to keep our peak steady, and that's part of our STEP plan, our Save for Tomorrow's Energy Plan. What's interesting is that red bar on 2016, where we saw a peak in 2016, that was because some of our demand response programs were rolling off at 5:30. And as soon as those demand response rolled off, our peak load jumped, and we hit that record. And so we are really challenging ourselves to be more sophisticated in our demand response and not just have it be a sort of on-off switch, but help shape that demand response so that we can extend it and cover that peak more accurately. And the reason that's all important for us, and I would ask a question to the audience, but I know y'all got questions coming my way. The reason for that is if we can control that peak, we don't have to build another power plant. Okay, so we size our system to that peak capacity, whether it's a power plant capacity, whether it's the poles and wires that are out there. And what's interesting is our utilization factor as a utility of our assets is, any guesses out there? Like a refinery's got 99% utilization. It's running 99% day and night. But for us as a utility, any guesses out there, utilization? No numbers? 25%. So 75% of the time, our assets are sitting idle. And it makes sense. I mean, in the winter and the spring, fall months, we don't need all that power plant capacity. We need that plant capacity during those hottest August afternoons. And so if we can control that load during that time, we can really increase our utilization of our assets and become more productive as a utility. So this is, again, this is a chart showing the demand response. We have 140,000 customers that basically we've partnered with, that we get about 2 kilowatts per customer. And again, for 140,000 customers, that's about 280 megawatts of capacity, which is a virtual power plant that we can turn on a dime, that has zero emissions, that the customer gets paid for. So there's a win-win there between that combination, and this allows us not to have to build another power plant. So the big story these days is ERCOT, because Texas is growing. We're seeing record temperatures, but no one's building power plants. And I don't know if I'm getting a signal. No one's building power plants because to invest in a 40-year asset without knowing where technology is going, renewables, battery storage, no one's really doing that. So there's a lot of wind and solar that's getting built in Texas, but no fossil plant. And the problem with wind and solar is you don't know when it's going to show up, and you can't kind of firm it up or dispatch it. So because of that, this is the reserve margin. This is the the supply versus the demand situation for all of Texas. And you can see that reserve margin, their target is 13.75%, and they've been historically kind of around or above that. But this past summer, they were at 9.3%, and this summer coming up, they're at 7.4%. So things are getting tighter and tighter and tighter. So this, what this means is, you have a couple plants that trip over the summertime frame. You could have rolling outages, or you have higher demand than what you expect. You could have rolling outages. So that reality, I think, is there. We in San Antonio have protected ourselves from some of this because we have a 16% reserve margin under our board. They want to make sure we've got enough to protect San Antonio. Not only is it rolling outages that customers are affected by, but it's pricing. ERCOT is an energy-only market, so power prices every 15 minutes based on supply and demand characteristics. So the price cap is $9,000 a megawatt. So for a 1,000 megawatt plant, that's $9 million that you're either making or losing an hour. So after 10 hours, you either have a $90 million day or you got a $90 million loss day. So the stakes are very high, and we at CPS Energy want to make sure we've got physical hard assets in the ground that can protect our customers from this risk. In fact, this past year, we made $140 million in the wholesale market because we had length, and there were hours where we saw extreme prices like that. At the same time, a couple days ago, I was looking. I've got a dashboard in my office with all the power prices, across the nodes in Texas. and it was straight up and down $7 a megawatt hour, which is, that's, you can't build a plant on that. So there are many hours where the prices are very, very soft, and there are there are a few hours where the prices are very, very high. And so that's the volatile market that power companies have to manage, and we have to manage on behalf of this community. And it's not easy. So where are we going? We talk about the flexible path. There's uncertainty there on technology. I talked about, do you commit yourself to a 40-year asset, $1 billion investment? There's a lot of questions. So we want to be much more flexible in our outlook and our strategy. And instead of thinking about 30, 40-year plans, let's think about annual updates to our strategy, look at different technologies, and really, try to stay very nimble in this changing world. Battery storage, obviously a huge game changer. Once you are able to firm up renewables, that really changes the dynamics in the power market. There's a lot of battery technology that's getting developed for the electric vehicle market. That's moving up into the utility scale. We were actually at the Gigafactory of Tesla's a week ago. Very impressive. They're producing about 1 million batteries there a year ago. Now they're at 3.5 million. So it is ramping up. The cost curve is coming down. These technologies will be available. The question is, when will they be viable from an economic standpoint? And they're not there today, in my view. Will it be 5 years, 10 years, 15 years? There's some unknowns there, but it's definitely happening. So until battery storage is there, it's really important that we continue to optimize and invest in our current plants, because our thermal plants, whether it be fossil or nuclear, are basically firming up a lot of that capacity that's happening on the renewable side. So the traditional power plant is almost acting like a battery to the renewables in this marketplace. So until batteries are there, we got to continue to maintain, operate, optimize our generation assets. So again, how this all comes together, our strategy is it's an integrated approach to serving San Antonio. It's traditional plants, it's renewables, it's energy efficiency, it's demand response. All this has to come together and work together for this community. And then moving forward, wasn't too long where, 20 years ago, we were in Edison. Thomas Edison could have come out here and said, these are the same poles, wires that I saw back in the 1800s. So, the utility industry historically has not been a very dynamic, innovative industry. My peers may call me out on that, but it's changing. This last 10 years, there's a lot of innovation that's happened in the utility sector. It's happening more and faster. The whole dynamic grid, smart grid concept, creating a more connected San Antonio that improves the quality of life. I think the utility, the platform that we have, has a real role there. And then we need to move beyond just kilowatt hours. We need to think about new products and services that we can offer our customers that are not a commodity, but really add value to their business or their lives. And so I'll bring all this home again. We're trying to do this with our people. This is not a capital asset play. This is a people play. And it's important to engage with our community, our employees, and our customers in this journey forward. Thank you.
Let me introduce our final panelist today, which is Kate Rogers. Kate serves as the president of the Holdsworth Center. She previously served as the vice president of corporate communications and health at HEB, where she oversaw all internal media and corporate communications, as well as employee engagement programs for the company. While at HEB, Rogers created and launched the company's early childhood literacy program, Read3, which produces an in-store experience, a community outreach curriculum, and access to free and affordable books. In 2006, she was awarded Ford Salute Education Award for her work in creating the HEB Excellence in Education Awards, the largest monetary awards program in the state, honoring outstanding public school teachers, principals, and districts. She's currently leading the development of a series of career-themed high schools known as the Centers for Applied Science and Technology. She also led the HEB Health and Wellness Task Force, HEB's statewide advisory board of health, and was responsible for the launch of HEB's nutrition services and the Slim Down Showdown. She's a native of Corpus Christi and earned her bachelor's degree in advertising and PR from TCU. She's a graduate of the Leadership Austin class of 2000 and the Leadership San Antonio class of 2005. She also serves on the boards of the Whitty Museum, the San Antonio Sports Foundation, SA Works, and was the chair of the 2016 San Antonio Heart and Stroke Walk. With that, please welcome to the stage.
Well, good morning. So I'm going to try and make up just a little bit of time so that we do have some time for questions. So before you all came into this room this morning, how many had actually ever heard of the Holdsworth Center? Okay, a few, so that's good. We're making progress. So we've been around for a whopping 18 months, so we're a relatively new organization. But I want to reiterate what I've heard this morning, which is we too are in the talent business. And I can't think of an entity or an enterprise that is more human capital intensive than our public schools. So our focus and our mission is on improving the quality of public education offered to all Texas children over the next several years. So why did this come about? So most of you all know who Charles Butt is and know that he's been committed to supporting our public schools for a long, long time for a lot of different reasons, not the least of which is that, there's two purposes to public education. One is extrinsic, right, which is our future workforce is dependent upon the quality of our schools. All of the folks in this room, future employees, most likely will come out of Texas public schools. But there's also an intrinsic and important purpose, which is the sustainability of our democracy, future citizens of the world, future leaders of our state and of our country. So it's important that our schools be really strong. And unfortunately, since 1983, when A Nation at Risk was first published, and the United States had enjoyed being sort of the education superpower of the globe from the period from 1950 to 1970, when we were the first to offer universal high school to all of our students, we saw a sharp decline. And that decline has accelerated since that time. And we've tried a lot of different things to try to stop the decline. But unfortunately, none of them have actually worked at scale. So while we're trying a lot of different reform efforts in public ed, it's been going on for 30 plus years, we haven't really seen any widespread sustainable lifting of the performance of our kids. So that leads us to know that there is no shortcut, there is no silver bullet. These are big, complex systems, kind of like CPS. These are systems made up of thousands of employees. Superintendents are managing multi-million-dollar budgets. It's a very complex thing. And Charles would be the first to say that selling green beans is not the same as producing future citizens of the world, right? It's very difficult. So the Holdsworth Center is named after Charles's mom, Mary Elizabeth Holdsworth Butt. She's pictured here. She's the third in the back row from the right, very petite woman, and she was a school teacher. In Center Point, Texas, in a school, one-room schoolhouse, back before she married Mr. Butt. And one of Charles's favorite memories of his mom, several years ago, he found a book that she had given him as a boy. And the inscription read, "If you think business is hard, you should try being a teacher." Charles would also be the first to say that everything that we do at Holdsworth is not about any of us, it's not about him, it's not about his mom, it's about the kids. So our focus is on really that the center of our core at Holdsworth is about excellence and equity in education for all children. So I mentioned what our mission is, to impact over time the quality of education, emphasizing the time. So Charles convened a group of education leaders from around the country a few years ago and said, if I was going to make a legacy gift to the state of Texas on behalf of our public schools, what would I do? Where's my leverage point? And this group convened for about 18 months, traveled all over the world looking at best practices in leadership within the education sector and beyond, and came back and said, we really think leadership is where you should focus. That's the leverage point. Charles would have liked to do something for all 350,000 teachers in the state of Texas. But they said, if you want to impact the quality of teaching, the biggest leverage point is the campus leader, the principal. So it boils down to leadership. And surprisingly, when it comes to leadership, which everyone who's been through an MBA program, has tremendous exposure to great leaders, the importance of leadership, et cetera, it's not a big emphasis in colleges of education today. So you got people leading big systems who really have very little exposure to what high quality leadership actually looks like. So I love this fact here, which talks about the importance of the campus leader. We know that they are responsible for recruiting top talent in their teaching force, affording them the autonomy they need to be successful in their classrooms, and keeping great teachers in the field and encouraging them not to leave. So our approach is to take a long view. So we work with school districts over a period of 5 years to really reinvent their approach to strategic talent management, which is not something, again, that is really well known within the education field, right? Succession planning is not something that school districts have a lot of conversation about. But every business owner in this room knows that you gotta have people in place. You gotta have a bench for when any key position opens up. We also are trying to change the paradigm that leadership isn't about superheroes. It's not about individuals, even though, in popular culture and movies and so forth, we like to celebrate that one powerful teacher, that one principal who changed the lives of some children. Again, our emphasis is on scale and teams. So just like the dean mentioned earlier, everything we do is in teams. It's the superintendent and their team. It's the principal and their team, including teacher leaders. Our goal is to build the district's capacity. So we come in, stand alongside the district, help build them up so that at the end of the 5 years, hopefully they don't need us anymore, and develop deep partnerships over that time. So our program is comprised of these 3 parts. So think of it sort of like an executive MBA. Each one is 2 years in duration. So district leadership, again, it's superintendent and team. We too think it's important to sort of get out of what you know. So we take them to far-flung places like Singapore to study their approach to talent management and education in Singapore. We take them to Canada, who, by the way, is doing really well when you look at North American education performance. We take our principals to New York, again, just broadening their horizons and their thinking about what is possible for kids. Same is true for campus leaders, 2-year program. They're with us about 35 days per year at the district level and about 25 days per year for the campus leaders. And then this, we think, is probably the biggest differentiator of Holdsworth, which is this district support. So we have consultants, many of whom have come out of management consulting, and as well as obviously many from the education field, who actually we deploy into the districts 2 to 3 days per week to support them. So when they come, they learn from our faculty, they go back, they want to implement the change. We're actually helping them to figure out how to do that and add velocity. So this is what it looks like over the 5 years. You kind of see how we cascade from the top of the school district at the superintendent level down to the campus leader through multiple cohorts of principals, and then the district support program. So it's very heavy support, as you might imagine, in the early years, and then it starts to taper off towards year 5. Here's our districts, and one of the things we think is a little bit different about Holdsworth is we did not intentionally go after the large urbans to start with, which is where a lot of the emphasis is for a lot of good reasons. It's where a lot of kids are, there's very high need. But when you look at the state of Texas, about 2/3 of our population sits in districts that are around 6,000 to 80,000 students. So that's where we chose to focus. Our districts are quite diverse. Some serve very high levels of low socioeconomic children, some serve not so many. And that's intentional because we want them to learn from one another. This is a cohort experience, which I know you're all familiar with, as much as they're learning from us. And we think it's important that they're exposed to what is Round Rock doing versus what's happening at Far San Juan Alamo in the Valley. Our campus, so Charles committed $100 million to fund the Holdsworth Center to get the program off the ground. As I mentioned, we're working with 7 districts across the state right now. We're out and about right now selecting another 6 to form our second cohort. But in addition to that, he's building a campus right down the road from the University of Texas in Austin that he has gifted to the center. So this campus, when it's complete, hopefully by 2020, the rain kind of set us back a little bit, will house, it'll have 180 sleeping rooms. So our participants, when they come to a Holsworth session, they'll actually be staying here at the campus. Has a full academic center, an administrative building, wonderful casitas along the lake shore for faculty to come in and stay, for fellows to come and study with us. Because our hope over time is to not only improve what's happening in our public schools in Texas, but also contribute to the field in terms of what are those most important leadership behaviors that either a principal or a superintendent needs to demonstrate in order to really move the needle for children. And that's surprisingly not something we know a lot about today, but by working with researchers from across the country, we're hoping to be able to make that contribution. So we still have a lot of work to do. We're very new. We're learning all the time. But initially, it's been quite promising. So we do a talent assessment in the districts each year. It's proprietary to us. It's very rigorous. Focus groups, surveys, one-on-one interviews with folks throughout the district. And we're seeing very nice year-over-year progress in the 7 districts that we've been working with. So still, we're not going to claim we've changed it from a C district to an A district in 1 year, but the early results are quite promising. So I will stop there. Well, two last things. Sorry. So this is the theory of change, right? That over the long term, we start with the leader. The leader makes a fundamental shift in their effectiveness. That actually has a positive impact on the system itself across the district. So with enough quality leaders at scale, we can create systemic change across the district, and that then leads to improved student outcomes. That's our theory. It might seem very basic to the folks in this room, but it's actually a really different theory than what a lot of people have typically thrown at the public ed field in terms of how to create sustainable change. The last thing I'll say, because actually Gail asked me to talk a little bit about what are some of the risks to this work, and it's certainly not easy, right? These are big organizations, very compliance-oriented organizations who operate in a political and public sphere, right? You got superintendent turnover. So think about this in the context of a CEO. The average tenure for a superintendent is 3 years. Now, most people know if you have a business that's in trouble, you got to give it a lot more time than that for a turnaround effort. So superintendent turnover is a huge issue, as is principal turnover, which is just slightly higher at about 4 to 5 years. So that's a big problem. School board politics, you sort of read about it in the paper every day, and superintendents have to manage that all the time, and it can be a huge time drain for them. So those are things that we sort of wrestle with. The time commitment is robust. So we ask people to be out of their school districts and spending time with us over 30 days a year. That's difficult. And they certainly can't do that if their board won't give them the flexibility to do so. And then internally, so what are we sort of wrestling with? Scaling too quickly without proving the efficacy of our program. It's a huge risk and concern. Building our district capacity, meaning we don't pull out too soon in terms of district support, because all these districts start in a different place and they move at a different pace throughout the program. So if our goal is to create 7 great school districts, we can't leave them too soon. Pursuing our impact with urgency, but also with patience, and then continuous evidence-based improvement. So we're constantly making tweaks to our curriculum, to the design of the program, so that we're actually seeing the changes both in the individuals and in the systems that we'd like to see. So just a little bit about the challenges that we're facing. Again, no silver bullet to fixing our public schools. So thank you so much. I think we're going to open it up for questions.
Just to plant one while you all get your thoughts together, we've talked different themes here about talent, and Keith talked about labor scarcity, and maybe I thought we could start there a little bit, whether it's Chris or Kate. I've heard our education dean talk about the lack of teachers, trying to get teachers to stay in the field, and Chris, you go out and try to find smart people in your organization all the time. Can you want to talk a little about talent and how you're finding the labor markets and trying to get people into your sectors?
Yeah, I think it's all about talent. It's all about getting the right people in place.
I think the challenge for us, our headcount's been pretty flat over the last decade. So we've tried to become more productive in our business. We've also leveraged outside contractors because when we see peaks and valleys in our demand, we don't want to be laying off and hiring people. So we've tried to keep our labor talent, our labor pool pretty consistent over the years. I think for us, the big thing about talent is we are trying to break the paradigm of having to have a line of progression, that the only way you can be a plant director is if you've spent 15 years in that plant. The only way you can be a VP is you spent 30 years at the utility. I think we're trying to put people in different roles in different parts of the organization based not partly on skill and competency, but more so on leadership attributes. Are they able to be strategic? Are they able to be adaptable in their approach? Are they able to run, work teams, get productive output from their teams? So we have been very active, especially under Paula's leadership, to rotate people into new positions and give them new opportunities and maybe try them out on the customer side for 18 months, a power plant guy or gal on the customer side, and then rotate them back over so we get that cross-pollination. So that's how we're thinking about talent.
Kate?
Well, I will say, we're seeing fewer high school seniors than ever before that are selecting teaching as a profession, which is a huge problem. The quality of the education system will be determined by the talent within the system. And if, kids are saying, I don't want to teach because it's too hard and you don't make any money, that's a problem. And I think, it's cultural. So over the past couple of years, we've spent time in China, in Shanghai, in Japan, in Singapore, in Canada, in Finland, etc. And all over the globe, teaching is regarded in a much different way than it is in the United States, right? In Singapore, teachers are called nation builders. There's no job that's more important. It's the equivalent of being a doctor in Singapore because it's about the future of the country. And so I think we have a real problem that sort of dates back to the days when that old saying, those who can't teach, that we have to start thinking differently about, what we want for our kids. Because I know a lot of parents, if your student came home and said, I want to be a teacher, the parent would be disappointed, or say, I want to go to the College of Education. I have a colleague who was a Rhodes Scholar at Oxford, and people would frequently say to her, she wanted to be an educator, and say, you're too smart to be an educator, without realizing the complexity of the job of teaching today, because you're trying to not just provide children with the academic skills they need to be successful, but everything that Chris just talked about, to be a critical thinker, a problem solver, an entrepreneur, someone who can collaborate well with others and communicate well. That's really challenging, in today's world that moves so fast that you're producing learners, not students who can do just one thing.
And Keith, from the Federal Reserve point of view, assuming this is not going to infringe on interest rates, things you see coming from helping the talent problem, do you see this relaxing anytime soon, these constraints on labor markets, or do you think it's just going to sort of go through the business cycle?
Well, we see more and more constraints on immigration, which has been a source of labor force growth. So that doesn't help anything. Eventually there'll be a recession, and that'll help things. But
perversely, I understand.
This year, we don't expect that, and so continued tight labor markets. And sometimes as my mom would say, necessity is the mother of invention. So businesses may, because of the labor constraints, think of new ways to do things. That helps productivity growth. So it's not all that bad. Certainly good for workers, but I don't see any easing up too much for this year.
Thanks. And one data point from the business school standpoint, we had about a 20% drop in applications for our full-time MBA program from abroad last year. And whether that's visa problems, immigration, the dollar strength, there are different reasons for that. But we've had a sort of global drop in demand for U.S. higher education, and we're the best in the world at that. That's the part we do very, very well. So that's a sort of a frightening statistic for many of us about getting talent at the top of the labor force. Questions from the crowd? Who would like to pose something? Please.
Chris, could you tell us, give us some how you're protecting us, how you're protecting the citizens of this community relative to the god-awful things that can happen via internet and the subversive units that are trying to bring us down, and what we might hope. Where do you think you are in the success of keeping us safe from them?
Yeah, that's a great question, and I have to take a little bit like Keith. We can't talk too much about our strategy because obviously we don't want to be too public in that. But at the same time, it's probably one of the board's #1 risk factors, the whole cybersecurity issue. I mean, we're becoming more connected. Our meters are now all connected, so if someone could figure out how to disrupt our meters, we could, they could turn off all the powers to the individual homes and businesses. So it is as we're getting more digital, it is becoming increasingly a bigger and bigger vulnerability. I'd say a couple things that we're doing there. We've elevated that function within the company. So under Fred Bonnewell, we have a chief security and safety officer. So as an executive reporting directly into the CEO, there's someone that is 100% focused on that issue. He's got a team of professional cyber experts that are kind of working with us on, again, shoring up our perimeters. I get phishing attack. They put out sample phishing attacks internally to kind of test to see if we will click on it, because the internal threat is kind of the easiest way for some of these outside actors to get in. So we're continuously tracking how many of our employees are actually clicking on things that they shouldn't be clicking on. So that's one thing. The other thing that we've taken is we've taken more of an integrated approach. So instead of just the utility by itself trying to figure out how to create the moat around our business, we're partnering with the FBI, we're partnering with the SAPD, with Department of Homeland Security, kind of a shared cyber gym type concept where all these resources are coming together, they're integrated. If something bad happens, everyone kind of knows about it at the same time, and we can leverage each other's expertise and resources. So those are two of the big things we're doing.
Thanks. I don't know, Red, if you remember last year we had one of our panelists was from cybersecurity, and it was one of the scariest talks we've had in a long time. And it was horrible. He was great, but it was horrible. Other questions?
What do you think the catalyst will be to build more natural gas plants?
That's a great question. At some point with San Antonio growing, the weather getting hotter, I mean, you're going to have more generation capacity. And the real question is, what resource is that? The environmentalists would like to see it go 100% renewables. That's not feasible today. So I think what's going to happen is we're going to build smaller units. So instead of a big 800 megawatt combined cycle natural gas plant, there might be a smaller recip engine, maybe 100 megawatts that you could add capacity. One deal that we've just done with a large grocer in town is a resiliency product where we have generation on their facility that's natural gas fed that basically can kick on when they've got reliability issues. It's a partnership with E-Rock. I don't know if y'all know E-Rock, a company out of Houston, but it's a natural gas fuel source. It is a plant. It's not a centralized plant, but it's at the customer site. Potentially batteries could serve that same potential, but that customer wants to be able to ride out power for days. If a hurricane comes through, like what happened in Houston. So, and batteries may give you 3-4 hours of sustainability, but then you got basically a dead battery. So natural gas, I think, has a play in there in terms of resiliency, but it's going to be smaller units, maybe more decentralized versus the big centralized combined cycle plants.
Thanks. Other questions?
Kate, I know you're not any lobbyist. How hopeful are you that we will see increased salaries and bonuses for teachers this year in this legislative session?
Well, I think that, right out of the gate, there's been multiple proposals that have been floated out, right? So I think right now we're looking at $9 billion. That's the number that's been set aside for both public ed and property tax relief. And $9 billion doesn't go very far in terms of property tax relief in a state as big as Texas. So, we still have never regained the $5.4 billion that was cut from our schools in 2011. So that hole remains. In addition to that, we've reached a point where property taxes, there's people, I think the average citizen believes that when they pay their property taxes, they go back to the public schools. But actually, they go back to the general fund and are redistributed to the schools. And for the last several years, the state has been using about $1.4 billion out of those dollars to fund other things within the general fund, particularly our escalating healthcare costs as a state. So it's a sticky problem. And there's a proposal from the lieutenant governor to give a $5,000 pay increase to every teacher, which would be temporal. I'm not sure what you would get from that. There's other proposals to tie funding to student outcomes, particularly the STAR test, which is also problematic in my view. I mean, at some point, the state has to, live into the obligation it has to provide an adequate and equitable education for every child, and has to revisit the funding formulas and the weights, particularly in those funding formulas. Back in the 80s, when these current formulas were put in place, even back then, we knew that a 20% weight for a low-income child was not enough. It was half of what was estimated it would cost to educate that child, and we've never filled that gap. But I think, it's going to take the political will for that to happen. And I think if we're going to see anything meaningful, honestly, Mike, it means that the governor, the lieutenant governor, and the new speaker are going to have to reach some sort of consensus about what they agree on. And right now, they're all really pretty far apart. Now, the other thing I will say, and I'm looking at Sarah, that is a big part that's on the table, is funding for pre-K. Expansion to full-day, high-quality pre-K, at least for currently eligible populations, which would also be a big win, but needs to be placed into the formulas, not in block grant, so that it doesn't go away.
Great, thanks for the questions. We're about 10 minutes over, so I think we probably should wrap it up. But I want to say thanks, Red, for coming out. Thanks for your remarks. Thanks, Rad. Thanks to all of our alums and friends. The last call would be if you see something up here and you'd like to get in touch with one of us university, get you excited about getting engaged with our students and making a difference, let one of us know. We'd love to have you back to campus, love to have you interact with our students. It will brighten your day. So give us that chance if you're up for it. With that, how about a round of applause for our panelists? Thank you. Thank you again for coming. Hope to see you next year in Hook 'em Horns.